Mike Tedeschi, Wealth Management Advisor at Perspective Wealth Planning with this week's market breakdown video. As we just wrapped up the second quarter, in today's video, we're going to take a look at the bigger picture. We're going to look at those monthly charts instead of diving down into the smaller zones. We'll take a look at the four major U.S. indexes. We'll take a look at some commodities as well. And then we'll talk about how great of a year we've had start-wise for the S&P 500 and for commodities and what that has meant when we see this much strength through the first half of the year historically. So first off, let's start with the chart of the S&P 500. Now, I see a lot of people doing this when they look at really long-term charts. They use the arithmetic charts, meaning every point on the chart is the same size. When you're looking at 30, 50 years worth of data, because we're going all the way back here to the 1970s, you really want to make sure that you are actually looking at it on a percentage adjusted basis, so a logarithmic scale, and you can see how much that chart just changed when I did that. If you look at the long time frames and you use the arithmetic chart instead, you can see what goes on in the 70s and 80s. You can't see it at all because, again, the price down there was in the 40s and now we're in the 4,000s. So again, if you're looking at long-term charts, always take a look at it on a log scale, and it makes everything look less parabolic. If you look at the bigger picture on a logarithmic chart, it gives you a much better understanding from a percentage basis. So when we take a look here, we can see obviously we had a very long couple of decade range in between the late 90s into 2015 before we had this ultimate major breakout. And then we had a couple of years in here where we traded inside of a range, and then really kind of what we had outside of that major panic selling at the beginning of last year was, again, a couple of years inside of a range with a breakout, second half of last year, and just a straight, steady grind higher, right? It's been a absolute incredible move. Indexes are up near those all-time highs, right? After a move like this, I mean, you can see when we go back to 2012, 13, 14, like when you make that breakout, you can have years of just grinding higher, right? A sideways move would not be surprising from a long time frame standpoint. We did, go from a basically 3,000 to 4,300 there in a short period. And if you take the lows from last year, we've almost doubled off of the lows the coronavirus in on the S&P 500. And so some cooling off would make some sense. But we have to see it happen first, right? Right now, every month that we've had this year outside of January, we have seen a grind higher. And we've started this month green as well. When we take a look in at the Nasdaq, my data doesn't go back as far. It goes back until the 80s, right? Look at the difference again in this chart, and then again if I zoom in here and actually look at it as an arithmetic instead of a log, look at the difference, right? This just looks absolutely, completely and totally out of control parabolic, and when I actually look at it as a percentage adjusted, right, it just looks like a straight, steady grind higher from 2010. And then finally, you had that ultimate break over the .com right at that key level in 2017. And it's been a nice grind up. The dip wasn't nearly as deep, right? In tech, we know that, right? Everything kind of went virtual over the last year. But you can see, I mean, we're just steady basically from 2010 up, following that nice kind of 45-degree angle up. Market had a very strong month last month, closed up again at all-time highs, right? Things do look really good here from the long time frame standpoint. The Russell chart goes back even less far. It goes back into the 1990s, right? We had really no breakout and no real price movement from 2015 basically. Even in 2019, 2018, we were still at the highs from like 2015. So it's a very different looking chart. But we could see that clean, clear break the end of last year, nice grind up. We have not really made a new high, but this is kind of that sideways zone that is healthy action here. So we're watching again the Russell to see if it can break and make that next high. Last but not least, let's take a look in at the Dow. Now the Dow, I do go actually all the way back to 1902 actually on this chart. So we can see there's a prolonged period of time in the 60s to the 80s where we don't really go anywhere. Again, you can see that long, basically same size base between 95 and that breakout there that happened in 2013, 14 in that zone. Again, we're just grinding higher. You can see the pullback last year held the important technical level from the breakout in 2016, and we are up near those highs. We did not make a new all-time high last month, but we're right there. So again, just all of these long-term charts still look really solid. They have just been a straight, steady grind higher now for about a year. Some cooling off would make some sense, but again, when you look at these charts on a historical basis, you have 5+ year stretches where you don't get a dip. You just grind higher for a while. So, markets still look very, very solid here. Next, I want to take a look in at the U.S. dollar. The U.S. dollar has held that major important level. We've looked at this chart on a monthly basis in a lot of our videos, but we did hold that 89, and we did make a solid bounce. We still have not put in a higher high on a monthly basis. We need to take out that 93.5. When we start looking at some of the other commodities, gold, for example, all right, I'm going to clean this up so we just have a completely fresh and clean chart. This goes back to the 1970s. This chart, we didn't break out of that 900 until 2008, and then we have that beautiful cup, and we do have that pattern here where that is a cup and a potential handle, right? This still could resolve higher. This is a monthly time frame. It's not going to happen in a super short period of time. We're still holding over the breakout level in on here. So the chart still looks good on a long-term basis, but this really has done nothing now for nine plus months. All right. Take a look in at a chart of silver, right? Some people might be surprised not knowing history here, but silver hasn't made a new high since the 1970s. All right. Hunt Brothers cornered the silver market. It was a fascinating read. I suggest you go check it out. It's very, very interesting. We actually topped right out there in 2011, and we're not back to that zone yet. This is a really, really important level that we are at. It is not nearly as clean of a cup and kind of handle as gold is, but you do kind of have that saucer bottom, and we are really kind of trading in this flag here. And again, it's put in higher lows when we look at this in here over the last few months, but you're kind of waiting for it to make a resolve higher. All right. We come in and we'll take a look in at copper. Right, copper did put in a new all-time high, fell back below that level. We're still looking at that 450 kind of area to resolve, and on a monthly basis, that 370 is a really, really important level. We come in here and we take a look at oil. Oil is fighting right in there at that 75 zone, the highs from 2018. Gets back up over that. Again, I think we run back into the mid-90s, potentially up towards that 100 zone. Really wild-looking chart, obviously, we know, with everything that happened last year. But, I mean, this has been a really important level, the mid-60s, really going back 2 decades at this point in time. So what happens here is really important. If we fail at that 75, you want to see it hold 65. It falls back below that, you're underneath of an important price action level that goes back many, many years, and that would be a concern. I want to take a look also in at platinum and palladium real quick. All right, we have platinum. The key level is at 1,000 zone. We tested it last month. We've bounced back off of it. As long as it stays above that, I still like the chart on a long time frame. If we fall below that, I don't like it anymore. We come in here and we look at palladium. Palladium is all the way up at those all-time highs. It's just slightly off of it. It tested that 2,500 level and rocketed off of it. That's exactly what you wanted to see as a really strong price action there. This continues to be a very strong chart, and it only goes back to 2004, but there's still a lot of price history here. I want to take a look in at lumber as well. And I wish this chart went back further. We only go back to 2008. There's some very interesting things that have happened in the past in this chart, but we were at 1,700 a month ago, and now we're all the way at 710. All right, that is a huge sell-off in a very short period of time. A little over 60% high to low there. And it is right at an important level here that you can see. There's really that 500 to mid 600 level is a very important zone based on the last few years worth of price action. So I know a lot of people are talking about this. We're continuing to watch it. I mean, that was just an absolute ridiculously explosive move to the upside. and now it's kind of come back down to earth. If it doesn't hold this 5 to 600 level, that means the entire move that it made post coronavirus is gone. So that's really, really important to watch what goes on here. I think that could give you some real indications of home prices if they're going to stay elevated and things like that. So we'll keep watching this moving forward. Now, we want to jump in, and since we're taking a look at the bigger picture things, I want to take this chart all the way back to the 1930s and take a look at the percentage return through a half a year for the S&P 500 and the Bloomberg Commodity Index. And what you can see is where we are currently at is tied for the all-time high zone. You've got to go back into the 70s before you see this type of move through this portion of the year. And there's not necessarily a ton of data points over 10%, but when we look at the data over 10%, it does get concerning. When we look at this, we have a pretty negative average kind of return for the S&P 500 over the next few months. We run into some real difficulty. And 1 year later, we're at 50%, which is worse than average because the markets do tend to go up. But what really gets concerning is when we look at the commodity index instead of just the S&P 500. Every single time, 2 months later, 1 month later, there was a decent size dip in the commodity index. And a year later, only half the time it was positive. All right, so it's a pretty negative data set, more for commodities than for the S&P 500. But basically, when everything is rock and rolling together, you kind of get into those environments where you have some complacency, you don't have nearly as much hedging activity, those type of things going on. And we've talked about that with the speculative behavior out of the retail traders. So there are some concerns under the surface when we look at the bigger picture. But I really would pay very close attention to that commodity index, especially when we see a data set like this coupled with what the US dollar is doing. If it can take that 93 and some change out and make a higher high, I think commodities might be in for a rough second half of the year, which would surprise a lot of people given the massive amount of inflation talk that we are going through right now. As always, I hope you guys have yourself a fantastic week. I'll see you guys next week. If you want to reach out, feel free to reach me at mtedeschi@perspectivewealthplanning.com or give me a call at 814-580-9881. I will see you guys next week. Take care.